Here we go. All right, good afternoon, everyone. Today is Tuesday, October 16th, 2012. Let me start off with the results, okay? The results of the live trading room this morning, we had 4 ticks profit on the ES and 13 ticks profit on crude oil. Excuse me. That was all we ended up taking this morning. I'll go over all those trades in just a few minutes. One other thing I want to point out, if you have not taken a free trial with us, go to www.cfrn.net/apply and apply for the free trial. All we need is your name and your email address, and we will send you an email with a link in it, with a whole bunch of links in it. There's links to videos about all the indicators. There's links to videos about how to download the platform, because you get everything you see here for a free trial for 5 business days. So you can download our indicators, you can download our platform, you can download everything. And then there's also links to get into the live trading room where you can sit and watch us trade for 2 hours a day for 5 business days. All right. Again, www.cfrn.net/apply. If you're on the free trial and you want to become a partner, you should have an email in your inbox right now. Go check your inboxes. If there's not one in your inbox, check the spam folder. You should have one in there with the details about what it takes to become a partner. All right. Now, what I wanted to cover here, options. We talked about this last week. I believe it was last Tuesday, a week ago, when we were below the lowest weekly trading zone. We talked about buying some call options, just straight buying call options. You know, we also talked about spreads and a couple other things, but just straight buying call options. This right here is from Wednesday, so you can see the increase had already started by Wednesday morning. We talked about it Tuesday and in the afternoon show last Tuesday, which was the 9th, I believe. Yeah, October 9th, if you go back and listen to the podcast. But this was Wednesday. I think it was Tuesday that we talked about it. Anyway, in the live trading room, we mentioned it. You can see right here the prices had already escalated a little bit. So if we just look at like this one right here, that it escalated 33% overnight from when we had recommended the call options on Tuesday. You know, the price at the time of the recommendation, it would have been about $13.50. Now this is a week later, the same options. They're up, well, $13.50. They're up just under 100% on the week. These options expire Friday, so there's not a lot of time premium in them right now. You know, as it decays, the time decay is not going to be that significant given the price, the way that the markets are running right now. But if you did get into it, I would say definitely lock in some profit here. Maybe take them off the board, but lock in some profit for sure. You know, we got a long way to go to get to the next weekly trading zone above us, which brings us to another possibility. If we get to that weekly trading zone, say today, it's quite a ways up there, and if we get to it today, then these put options are going to be darn cheap. All right, so you may want to consider buying some puts at that time. All right, just a thought. If it happens, that's for all the partners who know actually where the weekly trading zones are. All right, I've made a screenshot of this right here so we can reference it again later. And this one right here, on the new screenshots that I've made, I've actually done it with the date on the bottom so you can see the date as well as the time. On this one you can just see the time. This was Wednesday morning last week. All right, that's it. Enough on the options. Okay, I just wanted you all to see if you did what we said last week, or did what we had suggested, or even on a small basis. These numbers right here that you see, 100% plus 100%, the starting numbers for those weren't too far off of the numbers that we were at last week. Okay, just so you know. All right, let's see the trades I took. Let's start out with the ES. I'm up 4 ticks on the ES. Okay, I took 2 trades on the ES this morning. One was right here where it pulled back down and tested the BBC. It went up and it hung up here at the MA1. This was the high of the day at the time. It started to show sort of a rounding, and the cycle portion of the slingshot was moving down, so I moved my stop up to break even. Once we had 4 ticks profit in the trade, I moved my stop up to break even, and it took me out of break even. Then I went to my profit target. Came down again. This time I bought it again, and I held it through this little drawdown right here, all the way over to right here. This gave me this gave me right here 1 point profit. You can see it hung up here, and again we were looking at the high of the day. All right, so it was bouncing off the high of the day, and I moved my stop up to plus 1 point, and it came back out. It took me out to plus 1 point. Came all the way back down to the BBC, and then ran up to the highs that we're at now. Okay, that was the ES in a nutshell. That was it. There were a couple of trading opportunities. I took both of them. Let's see, the NQ. I have nothing on the NQ this morning, and the YM. I don't have anything on the YM, but I will show you on the YM. Let's see. Right here, it pulled back down to the YBR right there. All right, it didn't actually hit it, but it was blue, suggesting it was going to bounce up. All right, when this was happening, I think I was saying, wait and see if it goes through this right here. And it did go through it. It came back and did it again right over here. This time it actually did hit it. Okay, and it bounced up off it. A pretty hearty little bounce right there. That was the YM. I didn't trade the YM. I didn't trade the NQ either, but I'll show you the NQ just the same. I did circle some trades in here on the NQ, I think. Didn't I? I guess I didn't circle very many. I wasn't watching the NQ very closely today. But you can see we did have bullish divergence in here, pull back and test to the BBC. This was at the, this was the open. It was right over here. Let me blow this up a little bit. There's something in here that I'm going to go over that I will touch again on other charts where I've highlighted it already. Right here, we had a close above the yellow line, right, where it switched directions with the yellow line. Now the close above that is a spot to get long. So you could have gotten long right in there for that move up. Right here we had bullish divergence. After a bullish cross, tested the BBC with an up close, so you could have gotten long there as well. All right, so there were a couple of spots to get long right here. One was right there, if you wanted to, and another one was right here. Would have been pretty close to the same level, but you could have taken profit on the first one and entered again on the second one. All right, we had a bearish cross. It dropped right through it, right over here. Okay, it dropped right down through. So if you did try to get long there on the blue, obviously you would have lost. It pulled up here. We had some bearish divergence, gave a down close right there, and it made some profit over here from that spot. I believe that spot was 27.39, and it dropped from that spot down to 27.32 quarter for a 7-tick gain. All right. Let's see. In here we had a couple more things. Oh, I know why I didn't have anything marked up here, because I had some technical issues this morning. Right in there we had some bullish divergence. Tested the BBC with an up close right there. All right. Again, it tested right over here. It dropped right through the BBC down here to the yellow line. Okay, to the yellow line. Bounced off it and moved up. And we had a couple other divergent scenarios in here. One there and one right there. Where you could have bought after the bullish cross and tested the BBC with an up close. You could have bought right there. Could have done the same thing here, tested the BBC with the up close. Again, over here it came back down, hit the blue, and moved up off of that. Alright, so it's pretty much the same stuff all the way through. All the way through the day. Right here, it hit the red, and it moved down. Now what I'm looking for when it hits one of these levels, like the blue here or the red here, I'm looking for at least 1 bar's profit. 1 bar length profit. So in this case it's 4-tick range bar. I'm looking for at least 4 ticks profit. If it gives that 4 ticks profit, then I would consider that a successful trade, because at that point you can bring your stop to break even. And a lot of times if you bring your stop to break even after it does that, like right here, then you would be able to take advantage of a big run. Okay? That was the NQ. Now let's look at gold. I don't have any trades on gold today either, but it's all the same stuff. All these 4-tick range charts are all the same thing. You can see over here I have a couple spots highlighted right here, and I'll show you that a couple of times. All right. Right here we highlighted this because it pulled it back up, tested it. You could have sold it right there down to the BBC, then at the BBC gotten out. It would have completed that one full bar's profit down there. At the BBC, because things were conflicting, you could have gotten out and waited a minute. And then when it changed directions right here, this bar right here, this is, well, can I use that? The top of this bar right here that changed the direction is the one you wanted to wait for the close above for an entry. Right there it closed above it. You could have entered there and taken a little more profit. From there it dropped down here, hit the blue, gave at least a bar's profit, went over here, hit the red, gave some profit, did it again there, did it again here. This one right here didn't give any profit. It doesn't look like it. Nope, that one didn't give any profit. Maybe a tick or so, but definitely not the full bar. This one did, this one did, this one did. And that's just in the last, I don't know, last hour or so. Where are we right now? This is October 16th, and this is gold. Okay, I just wanted to make sure I didn't remember taking any trades on gold this morning. Apparently I did. I shorted over here because when I have yellow arrows drawn on the actual chart, those are trades that I took. But I shorted right here and I took a break even. I went long right here and I took a break even, and I went long over here and I took a break even. All right, every one of those had profit in them before I moved my stop to break even, obviously. And that is pretty much that. There were more opportunities than that. If you look at it right here, this was the bar that closed below. This is the one that closed below that. You could have gotten some profit there. This one went right through. This one gave at least a bar's profit. It pulled back over here with bullish divergence right there. Okay, with bullish divergence and a move up. That's pretty much it. All right, it's all the same stuff on the 4-tick range. You can see right here while I was doing this, right in there and right in here. Okay, while I was going through all this stuff. All right, that was gold. Soybeans. We didn't take a trade, but let me just tell you what we did do. This morning, one of the partners asked Dwayne what he thought about the soybeans, and Dwayne said we were back here when he asked. We were right in here, okay, when he had asked. And Dwayne said, I like selling 15.14. And knowing that Dwayne usually sells on a stop, I said, okay, you realize we're at 15.07, and he said, yep, I like 15.14 for selling. And I said, all right. And then he said, well, what do you have? And I said, well, right now on the soybeans, we have a long trade setting up. If it comes here and pulls back to the BBC and gives us an up close with the bullish divergence, we'll have a long opportunity. If that falls through, and given the location of the MA1 with respect to the BBC and the yellow line, we could probably buy down here at the yellow line as well. If you took this and you only had 8 ticks risk on, if you took it right at 15.06 and you only had 8 ticks risk on, this little wick right here stopped you out. If you took this right here, you only drew down 1 tick. From here, it would have been an 8-point profit, 8.75 cent profit, I should say, not point, 8.75 cent profit up to 15.14. And from here, it would have been 15.04 up to, that would have been a 10.25 cent profit. All right, if you would have bought that one. I do know that we had a partner that stopped out right here when he took it. He took the long trade right here on the up close, and I know he stopped out right there. Stinks when that happens. There was another opportunity to just buy it right there, even after the stop out. Once that happened, we were rejected by 15.14, just as Dwayne had predicted, and we got a bearish cross. We dropped down through here. Once we got the close down below that level that broke the elbow to the downside, right there was the spot. You could have entered right there. You could have entered right here. I mean right here on the down close. You could have also entered over here with the bearish divergence. Pull back to the BBC with the short. Any one of those spots would have been a good place to enter. There were 3 different places to enter right there. It pulled back up here to test it. Test the red line right there. Alright. It didn't actually hit it, but it dropped off it pretty hard and strong. And that's where you see where we are now. Alright. That was the morning on soybeans. The 6E, we didn't take any trades this morning on the 6E, but I did point out, I think I went through and circled again here, you know, getting a point when it bounces off of these things, or getting 4 ticks or at least 1 bar's profit when it bounces off of these things. And again, we had the close down below right there. This was the close below that. You can see that worked out to be profitable. If you waited for the pullback up here and it tested the BBC, it didn't actually hit the BBC, and it gave the down close. We did have some bearish divergence all the way through here. Okay, pulled back up here, bounced off the red, gave 1 point profit. 1 point. It gave 1 bar's length profit. Came up with bullish divergence this time. All right. Bounced off the BBC with an up close right in there for more opportunity. All right, now this is the euro. So the euro, you know, it starts trading a little earlier. It had some nice opportunities starting yesterday. Okay, and you know, last night in the Globex, right in there, all the same stuff. All right, that is the 6E today, and let's jump over here to, what else have I done? I did gold. I haven't done crude oil, and I haven't done the Russell. Right here on crude, you can see it bounced off it right here. Over here, it hit it for a nice move. Okay, I might have taken 1 or 2 trades on crude, but I ended up positive on the crude. All right. Let's see. You guys, are you all seeing this? All these bounces off of the areas. This one went right through, didn't give a point profit. Got to highlight the losers too. There it is. Now it's pretty straightforward, this stuff. I bought this one right here. Okay, the bounce down here, came here, hit there. I bought it. And I told everybody in the room I was looking for it to get right up here, and that's where I put my profit target, at that prior swing high, and it went right up there and took me out at the prior swing high. Alright, in this one I tried to sell this. I said I was going to sell it down here to the BBC, which would have been 9 ticks or $90. $90 a contract. And then I said if I did do that, there was an opportunity on the up close. We had bullish divergence, a bullish cross, tested the BBC with an up close to buy it for some more profit. And then it reversed quickly and came back down here where I did buy it. I was able to fill on that one. In here we have just your standard bearish cross, tested the BBC with a down close, down close, down close. Okay? The question, or it's sort of a statement, or a question nestled into a statement. Nestled, you get that? Nespa. The question is it better when there's 2 bars at the yellow line? And what that would mean would, you'd be waiting for an up close or a down close. Okay? Because if there's 2 bars there, they're not going to be the same color. Alright, you're not going to have 2 bars in the same place that are the same color. One will always be blue and one will always be red because they open at the top and the bottom of the bar. On the range charts anyway. Yeah, there's an argument for that. You see, this is what I was talking about. Red, blue, red, blue. You'd have to be, that's the equivalent of saying you're waiting for the up close. You can do that. On the spots where it's just yellow and it's not colored, in those places I would wait for the up close or the down close, whatever the case is. But in the places here where it's colored like this, then more often than not it's going to work out anyway. Alright, This one right here, it doesn't look like it worked out, but if you sold it right here at 91.49, right at the yellow line with a limit order, it drew down 5 ticks, and then it dropped down 10 ticks. Okay. So there's an argument for doing it that way, but you know, that's my take on it. All right, so that was crude oil, and that was crude oil, right? Yeah, that was crude. I'll show you the Russell really quick. The Russell didn't have too many trades today. I gotta find the Russell, and it's buried in here. Here we go. The Russell didn't have all that many trades today, because it was near a weekly trading zone, I believe. You can't see the zone right now, but let me flip to an hourly and back to my range. You still can't see it. Anyway, we had a nice one right here on the Russell pullback, right there. Okay, we had another one here that gave the one full bar. Here we had a test of the BBC after the bullish cross with an up close and bullish divergence. All right, that was all during the break. Here we had a pullback, gave one full bar. Here we had a test of the BBC with an up close with bullish divergence. It didn't really go anywhere. The MA1 held it in. All right. Again, show all the trades, not just the winning trades. Bearish cross right here, test of the BBC with a down close. And there you have it. In here, bullish cross, test of the BBC with an up close and bullish divergence. All right. So right there. Over here it hit it, and that one drew down 30.2 to 30.8. From 30.2 it drew down 6 ticks, and then it dropped 4 ticks, which is what you would expect. At that point, you would bring your stop to break even, maybe even reverse. What time are we at right here? Okay. Right there you had your bearish cross, test of the BBC with a down close with some bearish divergence right there. Okay, and again, right here. That was the Russell this morning. All right, it was very tradable. Very tradable on the 4-tick range. We just had another one right here while I was going through all this stuff. Right there, 4-tick range, test of the BBC with a down close and bearish divergence. This is what bearish divergence looks like when it's live. All right, what we anticipate happening is this green line is going to work its way down into the cycle, like it does in all these other ones. Okay. From here down to there, here up to there, here down to there. That's what we anticipate happening. All right. That's it, guys. Going to wrap it up. Again, if you have not taken a free trial with us, go to www.cfrn.net/apply. Can I correlate 4-tick to a time frame for you, please? No, you can't. The 4-tick range is based on price action. It's not based on time in any way. You could have, if you have a market that stays within a 4-tick range, here I'll scroll back to like the middle of the night. I want to scroll back to the middle of the night. If I need more data. There we go. If you have a market that, like in here, that stays in the 4-tick range for an extended period of time, the range, the 4-tick range bar is 4 ticks in height. Every single bar is the same height. They're all 4 ticks in range. And if price stays within 4 ticks in range for an extended period of time, you're only going to have a single bar. All right, like this right here, you see this bar is at 23:30:08, and the next bar was 3.5 minutes later. All right, that's in the middle of the night. That one was 23:33. The bar after that was 23:35. The bar after that was 23:43. You see how there's no time correlation in between them? This 23:35 to 23:43, that was an 8-minute bar right there, because the market just wasn't moving. Now, if you come over here, where the market is moving, in between these bars right here, 12:06:59, 12:07, that bar lasted a second. 12:07, 12:07:11, that bar lasted 10 seconds. So when price is moving, you get more bars. Okay, that's the difference between a range chart and, say, a minute chart or a 5-minute chart, 10-minute chart. 30-minute chart, and a 4-tick chart. Just to clarify even further, the difference between a tick chart and a range chart is a range chart, every bar is identical in size. Every bar is going to be whatever you set the range to be. It's going to be 4 ticks high for me. If I have a 4-tick chart on, that means every bar is going to have 4 transactions. 4 transactions. Depending on the size of the transaction and the liquidity of the market, that bar could be really long or really short. It's likely to be a short bar, but if, like, let's say on the NQ where it doesn't have, where it's not really liquid. Say somebody put on an order for one transaction, 10,000 contracts. Well, 10,000 contracts might cover 4 points worth of orders. If they were buying, it would be 4 points worth of orders at the bid. So you would have one bar, and one transaction could be 4 points if it were 10,000 contracts. I mean, nobody does that on the NQ, but just for example. Now, over here, while I'm doing this for the whole audience, while I'm doing this, the difference between a transaction chart and a contract chart is, on a transaction, it's the number of transactions. You can have the transactions go from a minimum of 1 contract to a maximum of, if it's a tick chart, well, there is no real maximum to the number of, well, it's the number of transactions that you have set it to, the maximum number of transactions per bar. Okay. Now on a contract chart, say you have one transaction that's, in this case, I have a 500 contract chart right here on the YM. Let's say I have one transaction that's 500 contracts. That's going to be 1 bar by itself. But you could also have 500 transactions that are 1 contract, which would also be 1 bar by itself. Okay? I know I went way beyond the original question, but I just wanted to do that in the recording so everybody can go back and listen to it. All right, going to wrap it up.